Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Monday. What's up, everybody? It's the Monday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you all had a great weekend as we are kicking off our Monday morning down about 18 points in the S&P off of the continuing tensions between the U.S. and Iran. So we're seeing that crude gapped up, S&P gapped down, and there's some movements all around. Thanks, everybody, for joining. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates every day that we put out a new video. If you are a regular member, do me a favor, click that like button and share the video with a friend. I want to get the word of the video out there so people know what we do each and every day. All right, let's dive in. S&P this morning, we are down 18.5 points on, like I said, the tensions between U.S. and Iran as we saw the gap down yesterday, and it's set up for a gap and go play. When we look at our gap and go plays, we don't get short until we get below the first candle's low, and so we've gotten below the first candle's low. It actually took a while to get there. We kind of faded the gap a little bit on the way up, and then it took a while before the first candle's low actually came into play. If you were more aggressive, you had a little opportunity here at trying this for a candle to candle, but then essentially what it did was it only got you really a very small move before then reversing and heading back up. But at the European market open, we did sell off pretty hard coming down through. So if you got in on that breakdown, then we've rallied up a little bit back off of there, but nowhere near where the stop loss would be in this case. And so now what we would be looking for is for price to roll over and kind of come back down. Now, in case we do see price come back down from here, I think the next play, if you didn't get in on that, is you can still go candle to candle from where this is, based upon this speed candle coming back down. I think that's really the trade that I would look up at this point for both the S&P as well as the NASDAQ. Now, the NASDAQ, we spoke about this level last night, this little level right here acting as a potential stopping point when price did break down below the gap and go, and that's exactly what happened. It hit this level, and we got an immediate bounce off of that region. My guess is if I pull up the Dow, we'll see that the Dow actually had a little demand level. Right, the Dow actually came right to its potential breakdown point and popped above there. So the Dow, we're looking today at a breakdown below this level, and we hit that level and then popped up from it. So if you don't want to do if you're not quite ready to get in, look for a potential breakdown below this 28,349 area inside of the Dow, or you've got your NASDAQ level as well, candle to candle style from this point, NASDAQ or S&P. But belief is that price will continue to trade down a little bit, especially early in the trading day. We'll see what that does, because you got to think we're going to have a pretty big gap. If you just use the daily sessions, we're going to have a pretty big gap from our prior session. Looking at crude oil, if I take a look at crude, we see that crude in the overnight, we had a little rally up. Now, we talked about if you were much more aggressive, there was an opportunity to get long on this little 15-minute area. We didn't really do much off of that level. Matter of fact, we popped right through it. You may or may not have had your stop this tight, but it still, I think, can pop off of this level and off of this zone, and we still may see price rally up from here a little bit more. If it does not, I think that you've got a gap fill level down here that is really a potential magnet for price. So keep an eye on that one in there. Not as much of movement in crude oil as I would have expected, and I think maybe this was an overreaction in the gap, possibly an overreaction in the other markets as well, and then this is why it's fading that gap area. Big picture is still continuing up in crude, and so this is just an opportunity to get long on a pullback into this range. Gold, we had look at gold on a little 15-minute level. So in the overnights, the gold level did hit, and we've gotten a little bounce off of that zone. If you missed that level, then you certainly still have the gap fill area down in here, but that level worked out pretty well for a little 2-to-1 so far. And then I think we could even see a potential breakout above this area in here. So keep this area in mind as well today. Bonds have changed big picture trend direction and have begun, they're slightly moving up. Now we filled the gap in bonds. So the gap trade, we did have our gap fill 1, 2, 3, 4, 5. We're on our 5th candle at this point. So if you got into that gap into the bond level, I think now's time to take your stop and move it to break even, because it looks like we're going to have the 6 candle rule come into play here very, very soon. And we traded all the way to the bottom of this zone, so without having really any move out of it. So I think at this point, take your stop, move it to break even, close that position. Maybe even take a little bit off the table if you so choose. But there's no reason to hold on to something if it doesn't look like it's going to move our way. But our big picture bond trend direction has definitely changed, right? Our 4-hour trend has switched more to an up position, and so that's going to tell us to look for longs. Although we might get a slightly deeper pullback into this region down here. That's why I would be cautious with this level that we've got in place right here. Looking at the Aussie, so the Aussie level, looking at the potential gap and go in the Aussie. Funny, we came down to this little low, rallied up, and then as soon as we got back to the potential entry area for the gap and go, we rallied back up. Doesn't mean the gap and go level is dead. I still think there could be now it's just a traditional breakdown trade below the 69.45 as a place to get short in this area. In the Aussie, we came really close to this little level here, and we've sold off, and now we're kind of getting a little bit of sideways price action. But I think the next best leg is for price to pop down into this region here. Euro. In the euro, we talked about a potential breakout above this blue line area, and so the breakout has indeed occurred, and we're rallying up to what would our price target would be. Somewhere up in this 2582 area, which would then be a potential for a reversal. Now, my problem with the reversal in this area, as we come into here, this is our price target, kind of heading up off of this is a little bit of an inverted head and shoulders, if you will. I think if we hit here, look for a reversal back down into this region. If I go to a 4-hour chart, right, on a 4-hour time period, we've got a better opportunity. If price hits here, we may only get a very small move out of there, but the next move would be for price to continue to trend a bit higher on our big picture trend. So if this hits here, then I would take a look at this little wick over wick area here as an opportunity for a long entry. And that happened at a really good time of day as well. Canadian dollar, we've got a potential breakdown level here that is just, I just keep making this line longer as we are staying above it just a smidge. I don't like this level above us any longer, simply because it's too much sideways price action below it. So I'm going to remove that supply level up above us to see if price can make it down into that region. Now, we could also break out to the upside in this case, as we are, my upside, the upside potential is still there as well. I like the breakdown, though, because you've got, on a daily chart, could make a decent little pullback area for a day trade. Looking at the Great British Pound and Japanese Yen. Now, the Great British Pound, we were looking at this triangle pattern. Remember that triangles can break any way, and it broke out the other way. But we didn't have any reason for a breakout to the downside, so no real loss in that position as I was looking for a potential breakdown. These are some really strong selling selling pressure candlesticks as we're coming to the close here. It's what time is it? 5:43 Central AM. So this candle's close to closing. If we close with this high of a wick, then it's going to set up for a nice candle to candle trade for price to come back down, probably into this range as a very small short-term day trade. Japanese yen, we have begun an upward, pretty strong upward spike in the yen. And last night when we were looking at it, we were looking at the fact that we had a gap up in the yen, and now it's really kind of gone pretty much sideways for the last little bit. So I think that the looking at what we have as far as price action goes, I'd love to see a pullback into maybe this region down here, which would be a speed candle, right? That's a speed candle, which we would anticipate getting retraced, where I think we could see price come back into this area. Now, this area here as a demand zone is a former area of supply. Resistance, 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 resistance. Old resistance oftentimes becomes new support, and we can see price rally up from that area. So lots of movements happening early today. Just make sure that you follow your plan and you don't get too far caught off guard. And remember that there are always trades out there. The key is to be patient and wait for them to come into your level. So if you have any questions, please send us an email, support@tradersarmy.com. Until tomorrow, everybody, I hope you have a great day. Happy trading. Stay safe.